A terrific Tuesday, XRP gang. I hope the week is off to a good start for one and all. We're chomping at the bit to share news from the crypto community and about XRP. Big bears on the prowl on Monday. There's plenty to talk about as well. We'll take a look at what the charts are doing and get some more insight about that ongoing court case. That and more is coming up. But first, let's roll that intro. Hello and welcome to Moneyside, your favorite crypto news channel. We're glad you're joining us. If you're new, welcome aboard. And to my returning crew, great to see you again. While you're here, take a moment to subscribe, like the channel, and turn on notifications so you never miss out on any of our daily updates. That said, let's get the ball rolling with some news and interesting words about the SEC versus Ripple suit. It comes from an article which was shared on the website Nasdaq.com. They share this article from a contributor from InvestorPlace.com, Josh Inamoto. He specifically shares thoughts about the positive plan by Ripple to implement XRP and utilize blockchain technology to create a new paradigm for financial transactions. The idea? No longer must cross-border transfers be so expensive and time-intensive. Inamoto talks about innovations made by Ripple and how they will be transformative globally, but how the case is hampering their mission. But of course, the government cannot let any good idea go unpunished. More specifically, the U.S. Securities and Exchange Commission, SEC, has decided that the crypto in question is actually not a virtual currency, but instead a publicly traded security. As such, Ripple Labs has sidestepped deeply entrenched laws that govern the sale of business equity. Not only does this have implications for XRP, but also other coins and tokens. Inamoto goes on to reference the guidelines being used in the case and argued by the SEC that the Howey test leads them to claim XRP is a security. But therein lies the problem. According to Inamoto, regarding the Howey test, one last glaring problem with the SEC's lawsuit against Ripple is the basis for what an investment contract is. Specifically, the definition depends on the ruling of SEC v. W.J. Howey Company, from which we get the so-called Howey test. But the thing is, this case reached the Supreme Court in 1946. And he adds, put another way, the Supreme Court could not have possibly realized what an impact decentralized digital assets would have on the financial system. And it's certainly interesting seeing how all this litigation will play out. And ultimately, I still remain confident that Ripple and XRP will emerge as the real coin that will dominate all others. Before all that can happen, however, the continuing saga of the SEC versus Ripple case must be sorted out. On Monday, the bears took over much of the crypto and stock markets and dominated the day with sell-offs. Bitrates.com described the situation that saw some cryptos win, many others that were not so fortunate. Their report said the cryptocurrency market is seeing bearish price sentiment due to the upcoming Tuesday testimony to the U.S. Senate and Banking Committee by the Securities and Exchange Commission's chief, Gary Gensler. Gensler recently said that he would support the issuance of a Bitcoin exchange-traded product, but it is also clear that he is looking to take the wind out of the digital currency sector's sail with other regulations. The key area in the regulatory body's sights is stablecoins, and we would well see comments on that tomorrow. Republican Senator Pat Toomey of Pennsylvania asked Gensler recently if he believes stablecoins are securities under the Supreme Court's definition of an investment contract called the Howey test. Gensler declined to give a true answer, saying they may well be securities. Gensler also took aim at the Coinbase exchange, saying that some of the coins listed on the broker's platform could also be securities. The pending testimony and concerns about regulations impacted more than just XRP. According to the site nationalworld.com, the crypto sell-off saw the bears eager to dump their shares, which led to market decreases in overall values of multiple cryptocurrencies. Those included Bitcoin, which was down at one point by almost 6.9%, Ethereum down by 9.85%, Cardano dipped by 9.85% as well. Solana was down by over 11%, Dogecoin down 11.67%, and XRP at one point dipped by 14.21%. The pending testimony may have been a factor in the sell-offs in the crypto markets, but other events led to drops on major stock markets globally. With decisions on rates to be released by the Bank of Japan, the Bank of England, and the U.S. Federal Reserve scheduled for Wednesday, many investors pulled back. The Nasdaq, Dow Jones, and S&P 500 were all down on Monday, as were markets in Europe and Asia. The most important thing to remember about down markets and bearish trends with major sell-offs is to maintain your cool. Don't ever panic buy or panic sell. If you see the dips as opportunities, many times you can reap the rewards if you plan on long-term investments and being a holder. One major reason most analysts pointed to for the sharp decline in all the markets came from the Orient and a Chinese real estate company that may be about to default. Yahoo Finance had more details about the crash, reporting that markets were jolted by news of Evergrande, a major Chinese real estate company that's teetering on the brink of default. China's potentially slowing economy and Beijing's aggressive actions against key business sectors have converged with worries about the global economy. The spillover effects were apparent across the crypto world. According to CoinMarketCap.com, top payment networks such as Ethereum, Cardano, Binance, and Solana all have sustained even deeper losses than Bitcoin in the past 24 hours. All were off by at least 8% on the day. Given the fees associated with moving crypto on and off most centralized crypto exchanges, this rising flow volume to exchanges is one indicator that Bitcoin holders could be looking to sell. Meanwhile, the overall balance of crypto on exchanges continued to decline this week. So with all that going on, what is the XRP community saying? Let's check in on the Twitterverse and get some insights. This one is from Gary Gensler. Tomorrow at 12, I'll be live with @WashingtonPost to talk about cryptocurrency. The live stream will be here. You can be sure that I will be checking that out at WashingtonPost.com. Maybe you will too. Now say what you will, but I'm not so certain that Chairman Gensler will be live at 12 noon with the Washington Post. According to the schedule of the U.S. Senate Committee on Banking, Housing, and Urban Affairs, they will be in open session, hybrid format, conducting a hearing entitled Oversight of the U.S. Securities and Exchange Commission. The witness will be the Honorable Gary Gensler, Chair, U.S. Securities and Exchange Commission. I am almost certain there will be some serious questions for the chairman, and let's hope we get some clarity on the regulation of the crypto industry and maybe get some clue as to what is happening at the SEC. Just know we're going to have complete details for you right here on Money Side. All that said, still a number of the XRP community on Twitter saw Monday's bear run and so-called crash as an opportunity. Seems to me that with the price dip, you have a chance to score more XRP before the price skyrockets. It's just a matter of time. Let's break out the charts. Take a look at the numbers. Ripple extends the bearish leg to 86 cents but gradually recovers to 94 cents. A confirmed breakout above 95 cents would affirm the bull's grip on the price for gains eyeing levels above $1. Ripple explored the levels below $1 following the bearish wave that started hitting the market on Sunday. The cross-border token had lifted to September highs of $1.40 before a correction trimmed losses. Initially, support between $1 and $1.10 mitigated the impact of the bearish wave. Nonetheless, the last 2 days have been highly volatile, with Bitcoin dropping from above 48,000 to nearly 42,000. Meanwhile, XRP plunged to test support at 90 cents, but the candlewick hit lowers to 86 cents for the first time since August. The support at 90 cents currently ensures that Ripple does not drop to the following critical demand zone, the red band slightly below 80 cents. At the same time, it ensures that buyers have the upper hand as they focus on the rebound to $1. Ripple is trading at 94 cents at the time of writing amid a bullish building momentum. The moving average convergence divergence, the MACD, emphasizes the bearish grip at the moment. Still, there's a possibility of a buy signal coming into the picture, especially if Ripple gains momentum above 95 cents. It is essential to watch out for the 12-day exponential moving average, the SMA, crossing above the 26-day EMA. Moreover, a consistent MACD movement toward the mean line would add credence to the optimistic outlook. As Ripple recovers, some delay should be anticipated at $1, where some holders will try to break even, dampening the selling pressure. However, the most substantial supply zone is the red band on the 4-hour chart. A break above this area could liberate XRP and pave the way for another leg up to $1.20 and later to $1.40. On the downside, if losses extend below 90 cents, Ripple will quickly drop to the green band, whereby bulls will put up a fierce fight, perhaps sending the cross-border token significantly upward. Remember, gang, do your research and trade safely. As always, we're not a financial advisor, Information contained on this channel is intended for entertainment purposes only. Please subscribe and like if you found this informative. Have a comment? Maybe a prediction? Do just that in our comment section below. Hey, make sure you turn on notifications so you don't miss out on any of our daily updates. Thanks again for watching, and we'll be looking forward to seeing you in our next video.